Well, all right. Well, we'll get started here. Good afternoon once again. Welcome to the Coastal Housing Partnerships webinar series. Today's session is called From Renter to Homeowner. My name is John Peterson. I'm the Executive Director of Coastal Housing Partnership, and we are excited to have you here today, taking advantage of this benefit that you have through your employer, and hopefully to give you some good insights into if you're ready and how to make the leap from a renter to homeowner and how to utilize the benefits through Coastal Housing Partnership. I'm really excited today to have Olivia Brown from Montecito Bank and Trust here with us. She's been a great partner for Coastal Housing Partnership and in the community, and so she's going to bring us some great information and insights. I'll remind you of this later too. Olivia will also be at our home buying fair on April 29th. And so her information is there on the screen. You can reach out to her. You can also meet her in person at the end of the month at the home buying fair. So just to get started, Olivia, is there anything else you'd like to say to introduce yourself?
Thank you, John. Hi, everyone. Good afternoon. So like John said, my name is Olivia Brown. I work with Montecito Bank and Trust. I have been a mortgage loan originator there for just over 5 years. In the business total, as a loan officer, 12 years. So prior to Montecito Bank, I worked for a builder in town. So I have the history of lending, and I'm looking forward to talking to you guys about how to go from renter to homeowner today. So thank you for having me.
Great. And one other thing I mentioned earlier, but I'll say it again as we jump into the conversation. On this webinar format, you won't be able to talk as a participant or an attendee, but we do want your questions, and we want to make this as helpful as we can and interactive. So please enter any questions you have in the question and answer section there in the webinar at the bottom of your screen. And we will get to those either within the presentation or as we get to the end. So don't hesitate to throw out your questions so we can answer what's most pressing on your mind. So as we get started here, Olivia, the question is now a good time to think about moving from renter to homeowner?
Absolutely. I think it's a great time. It's always a great time to purchase a home. So right now, you might hear talk about rates. Rates are kind of volatile right now. We still are in an environment where we don't really know what rates are going to do, but that you shouldn't let that kind of stop you from making that leap into getting a pre-approval. The inventory, because it's spring, has I think come back a little bit, so we have a little bit more inventory right now, which is always a good thing, a little more options. But yeah, it's a great time right now, I would say.
So, and just following up on that, I mean, what are some of the benefits from your perspective of home ownership and jumping into it, even if it feels a little scary at times or a little bit like a big undertaking?
Yep, absolutely. So I would say one of the first benefits is if you're renting, there's potential for rent increases, right? And that can come quickly and maybe overwhelming. So with homeownership, you don't have that in the mix. You don't have to worry about payments increasing over the years, unless you're in like a certain kind of loan, which is an adjustable rate mortgage, but we'll talk about that later. The other benefits are, not just financial, but also social. So you have a sense of community. You have maybe some security of knowing that that is your property and that you're going to be there. And then, of course, you have the benefit of equity. So as maintain and own your property, the equity over time will increase. So you're building something for yourself, for your future in home ownership with that. So those are a few.
Yeah.
Oh, and there's also, possible potential tax benefits to home ownership. So I'm not a CPA, so I can't really say too much about that, but you can check with your financial planner or your CPA as to what those potential tax breaks might be.
Yeah, absolutely. Good write-offs and things for as a homeowner. And I would just throw out the Coastal Housing Partnership. Some of you may have taken advantage of our renter services and our rental site. But really, when it comes down, the Coastal Housing Partnership, in addition to education and these webinars and our home buying fair to help you get prepared and ready, through our partners like Olivia and realtors and others you can find on our website. That's where you'll see the discounts on and credits on your closing costs, to really help you see some advantages there through the partnership. All right, so let's get into it. So what is when we think about moving, what's my first step? Should I go out to some open houses, or what would you say is the first step in the process?
Yeah, you can go look at open houses, see kind of what maybe what price range out there is what it piques your interest. But I would say the best thing to do first would be to meet with a loan officer. That way you can discuss your financial situation, your credit, your income, your assets, get a really good feel for, what your payments are going to look like and before you start looking, because then you'll have a peace of mind going into when you do go to these open houses. Yes, this is what I can qualify for. This is where I'm comfortable with the payment. So I would say first step would be to meet with a loan officer.
Yeah, and I would add on to that, just as I'm also a realtor, and it's just really important for you as the buyer and for the team you'll put together with your realtor and your lender, that you really understand where your financial situation is and what you can afford, and it just saves you a little bit of heartache of going and finding something you love, and then seeing a house first that you love, and then finding you can't afford it. So it's important to get understand where you're at financially, and sometimes there's situations you can resolve to help you have a larger purchasing power, but they may take a little bit of time. And so if you talk to the lender first, you'll be in the best position when you do start looking, because even as the inventory is growing, it's hard to know how long any particular house will stay on the market. So we always recommend people talk to a lender first, because there's a lot of really helpful and useful information you can get from them. And so coming to a real estate agent with that pre-approval letter. Um, so what would you need? What do I need to have prepared when I go to meet with a lender? What should I be planning on bringing or expecting in my conversations with a lender when I first
Yeah,
meet?
absolutely. Yep. So every lender is a little bit different, but we typically will have a list of documents that we need. So you can go one of two ways. You can either set up an appointment just to have like a conversation and maybe have some numbers run, or you could ask the loan officer for what list of documents they require, and then you could come prepared to that meeting with as much on that list as possible to get a good idea. Even without doing an application, we can look at your financials and get a good idea of kind of where you're at. Um, so we would eventually require a credit report with the application, but list of financials that you would want to bring, that would include maybe income and asset documents. So pay stubs, typically we require pay stubs for the last 30 days, W-2s for the last 2 years, and sometimes filed tax returns for the last year or two as well. And then for asset documentation, we're going to look for bank statements. So typically the lenders are going to want actual complete bank statements with all pages for the last 2 to 3 months. For each bank account that you have, you'd want to bring maybe if you have retirement funds or even stocks, bonds, crypto, a lot of that can be used surprisingly. So you'd want to bring statements for each account to determine what, we can use for you.
And so just to kind of follow up on those a little bit, two questions. Number one, why would they need to see all of that? And what are they looking for? And two, when you say crypto and stocks and things like that can be used, do you mean I'm gonna have to liquidate those and use those as cash or in a different way?
Yeah, so first question, why would we need those? Basically, once you apply for a loan and we run your credit and we collect your financials, they go to an underwriter who will review those for approval. Sometimes that happens early in the process, at a pre-approval stage. For example, our bank will not do just a pre-qualification, but we do a formal pre-approval. So an underwriter is going to look at those documents to make sure that what we're putting in the system to qualify you actually matches up. And so the income, we want to look for things like debt to income ratio. There's maximums, which means the amount of income that you earn versus the amount of debt that you have. We cannot exceed certain ratios on those. So that's one thing we look for with income. And then for assets, we want to look to see that you have funds for closing. We want to see that you have possibly reserves, meaning you have enough money in the bank that if you need, basically like a payment or two, if for some reason something happens at work and you don't have income for a month, you have the funds in the bank account to make the payment. So a lot of times we look for reserves. Stock and crypto, I don't know if there's a lot of programs that you can liquidate those to use it for closing, but I believe there are. If something you don't want to liquidate that, but you have that, I would still say bring it because a lot of times we can use those funds for reserves.
Yeah,
Does
yeah,
that help? Does that
yep,
answer? Okay, good.
absolutely. Yeah, that's what I was thinking. No, that's important. And uh, well, before I go to my next question, we have a question from one of our attendees. Can you tell us a little bit, what's the difference between a loan officer, a lender, and a bank?
Oh, good question. So a loan officer is usually an individual person who is licensed with the NMLS to take a loan application and quote rates. That official title could either be mortgage loan originator, mortgage loan officer, loan advisor. We have multiple capes, so to speak, multiple titles that we can go by. A lender does not necessarily have to be just mortgage, but a lender is kind of like an umbrella term for anyone who does loans. A lender could be a commercial lender doing commercial lending. It could be a lender for auto loans. So there's different types of lenders, but lending just means that they're going to give you a loan of some sort. And then the last one, bank. So loan originators, loan officers they work for a lender, right? But they can work for a bank, they can work for a mortgage broker, they can work for a mortgage banker. So when we say bank, that doesn't necessarily mean a mortgage lender, because there may be banks that do not have a mortgage department. So a bank is, you can do depository accounts, checking, savings, etc. So sometimes they can overlap and sometimes they don't, if that helps.
Yeah, and so is there a benefit and or what is the difference um, between going to a mortgage broker versus a mortgage originator at a bank slash an online service versus an in-person type situation?
Yep. So most lenders right now offer online applications, online banking, but you should always be able to meet if you want with a loan officer in person. I think that should be an option, especially for first-time home buyers who have a lot of questions and they just maybe feel more comfortable sitting with someone. Differences, a lot of times banks have the ability to portfolio loans, which means that the loans are done in the bank and they're not sold to somebody else after closing or something like that. We have our own guidelines. We have maybe internal staff, local operations, underwriting that will help with the loan closing. If you go to a mortgage broker, the benefit of that is they may have access to more programs. Um, for example, there's different types of loans. There's conventional, there's FHA, there's VA. So some banks might not have FHA or VA financing. So if you go to a broker, you may have more options there. The benefit of a bank, maybe you get like a complete service with the bank. So you can do all of your, like a one-stop shop, so to speak. You have your accounts there, you have your lending there. It's maybe a more um, uh, customized or comfortable setting versus going to a broker. It depends. I always say check with both. See who you're comfortable working with.
Yeah, I was going to say that. I mean, I think, the great thing about our partnership is that Coastal Housing Partnership has network partners, all types of network partners. We have mortgage brokers and we have bankers and lenders, and you can find the whole list on our website. And I would encourage you as buyers, particularly as if you're a first-time home buyer, to have a few meetings and meet with a few people. One, you want to just check out the relationship and see how you get along. You're going to be doing a lot of talking. You're going to be sharing a lot of information with these people. So you want to have good rapport and good interactions with them. And number two, you want to find out who's going to have the best fit for you, particularly if you are a VA, a veteran, or if you qualify for some of these other programs. You want to make sure that you're getting the best financing program for your situation. And so it's okay to have those conversations with a couple of folks, right, Olivia? I mean,
Absolutely.
that's a you would do that in a lot of areas of your life, and this is a huge purchase. You absolutely want to meet with a few people, and we'll talk about that too. I mean, that's the case with realtors as well. I'm going to go back to credit unless you have anything else you want to add to that.
Nope, I think I'm good there.
Okay. So you mentioned credit, and I think it's important to spend a little bit of time talking about that, about the importance of uh, your credit score and how that plays into the home purchase. Um, and also, as far as taking time to improve our credit and getting our credit in good places. So a lot of times we get questions like, or people saying, I just want to get my credit fixed, or I want to address it, or I've got too much debt. And, um, I would encourage people to go and talk to a lender sooner rather than later, even if you have some things that you need to look at on your credit. Um, there's a saying, and you can expand on this, Olivia, marry the house and date the rate. A lot of one of the major factors credit's going to impact is the rate you can get, right? It's the bank or the lender's comfort with your ability to repay is what credit's saying. And so your rate can change and you can refinance and get better information. But more importantly, I wouldn't take a lot of time working on your credit on your own before you talk to a lender, because sometimes lenders will say, well, before you put savings into paying off that type of debt, we need that money for X, Y, or Z, or for down payment and things. Um, so that just kind of goes to, tell us a little bit more about, as far as credit is concerned, where in the process should we talk to a lender versus trying to assess our credit from some online Credit Karma or otherwise.
Yeah, I always tell people that when a mortgage company runs your credit, the score is going to be a little bit different than what you've seen maybe on Credit Karma. Mortgage companies have a different scoring model. So I always tell people Credit Karma is and other sources, not just Credit Karma, but sources like that are very good to determine if your score is increasing or decreasing overall. But if your Credit Karma score is a 750 and you come to a mortgage app and we run it and it's a 720, that you shouldn't be concerned about that difference. That's possible. Like what John was saying, I agree with that. I think it's best to meet with someone first, because then if we need to come up with a plan of paying debt down or off, then we can do that at that meeting versus you trying to maybe pay everything off and sometimes you don't need to pay anything off. So you we'd rather have those funds maybe for the down payment, for closing, for reserves, as opposed to paying off debt. It is true that the better your credit score, the better your interest rate, but there are different programs out there, and depending on what your score is and what program you fit into, it may be the same rate if you have, a 680 or a 650. So there's just different programs. At our bank on our portfolio, anything over a 720, the rates are the same. So you can get the best rate if you have a 720 or if you have an 800 credit score. So that's one thing to keep in mind. I do have a few tips on if you're like, where do I start with credit? And you just really want to get your score boosted with regard to revolving debt. There is a factor where the credit companies like to see your credit card usage at 50% or less, or 30% is another sweet spot of credit card. So if you have a credit card with $1,000 limit, you want to keep those balances, try to keep them under 500 or under 300 at any time. I've had borrowers in the past who have maxed their cards out, go to 1,000 and then pay it off every month, go to 1,000. And if we run your credit when that card is maxed out, your score will probably be a little bit lower than it could be if your debt was lower. Your usage, I should say, was lower. So that's one thing to keep in mind. And then the other thing I tell people is never close out accounts that have good pay history, because when you do that, on revolving accounts, if it's like at the end of your auto loan and it's going to naturally close, then that's different. But if you have a really good pay history on a credit card and it's, more than 2 years and you close that credit card, it could have an impact because they might not count that good pay history in your score anymore. So you just want to keep those open, maybe let the creditor close them if you just don't want to use them anymore, so you maintain that history. There's also a question of, what if you don't have a lot of credit? I think there's still programs out there that will use certain, I think it's, I can't remember the name of it, non credit, where you can use maybe utility history, cell phone history to generate credit scores. But if you have, I'm not saying go out and get a bunch of credit cards, but it might help to just get one credit card that you use and pay off every month to help establish a score, or even a secured credit card is an option. So
Right.
that's my credit spiel, I think. I don't know.
Yeah, yeah. No, so the question came in, can you please share again what's considered a good credit score? So for your bank, 720 and above, generally you get above 720, you're looking at good rates. Maybe there's another tier at what, 750, 780, something like that.
Yeah, depending on the lender. So, yeah, I think they go by typically 20 points. So like 740, 760, 780 are kind of different tiers, but, good credit, I would say 720. Or I think that actually the good credit score goes down to a 680. Fannie Mae, I think requires, and Freddie Mac require a 620. And then FHA, you can go down, I think, to a 580. If you're below 580, you can still do a loan with 10% down. So there are different options there for credit scores.
Yeah, so there's a lot of options with credit, and we could certainly talk more about that if people. I think a couple things just to mention briefly that I've heard from other lenders that they've changed the rules. They're no longer counting medical um, uh, loans or medical debt against you on the credit. And another good one is, and here's an example of what not to pay off. If you only have 10 payments or less on a car loan, you don't count that, right?
Correct.
So,
If the payment history has been good the whole time.
yeah, good point. So just go and talk to a lender and have the discussion about your credit. So when we work with our employees and our partners at Coastal Housing Partnership, we often find that people are ready to buy sooner than they think. They might be holding back because of this, well, we just spent a lot of time talking about with their credit, or they're waiting to save up 20% of the down payment, or they're looking online and everything's just too expensive, they think. But what about you, Olivia? Do you find that people are ready maybe sooner than they might think to buy? And what are some of those hurdles that people are waiting on that they maybe don't have to wait as long before they start thinking about it?
Yeah, I would say it can go both ways. I think that sometimes people think they're ready, and then, like we were just talking about credit, there may be a credit hurdle shows up, and maybe they had a collection on a cell phone bill that dropped their score significantly that we need to get removed. So it could go that way where people think they're ready, but then those things come up. Or the other way, I've had people think there's no way I'm going to qualify, and we run their credit and look at their income and their assets, and I'm like, how did you think you were going to qualify? Qualify just fine. So it absolutely can go both ways, which is why, yes, that we say meet sooner. Um, the hurdle or the things that maybe people want to wait. Right now, I have a lot of people waiting before they file their 2024 tax returns, um, which is a valid point because especially if we have to maybe average income or anything like that for the last 2 years, and maybe you had a good jump in 2023, and now we're looking at 23 and 24 versus using 2022 income, then absolutely. Let's get those 2024 filed and then sit down. We can also start the process and follow up with documents like that as well. I know we're getting close to the deadline on taxes, but I think some people have extensions going. So that's one thing that some of my borrowers have been waiting for. I can't think of anything else offhand, but or paying off a collection. Maybe they have the funds with the tax refund to pay off debt or pay off collections.
Mm.
Sometimes if people want to do that and they just came into some money and they want to pay off debt, pay down debt, that's great. It will typically take maybe a month from the time you pay that off to cycle through for your scores. So that, I mean, that's possible that you wait to do that and come in kind of as fresh as you can with credit. So yeah, but again, you might not need to pay off that debt, and that those funds might be better geared toward down payment, closing reserves. So
So I'm going to follow up on that with a question that we didn't have, but there's a question here from a attendee, and
mhm.
and something else that's been discussed. So the question from the attendee is, what is a good rate right now? So maybe we can talk a little bit about where rates are. And then the second question is also in terms of being prepared. Do we always need 20% down? And maybe how is that going to impact our rates?
Sure. So depending on the program, so conventional, you can do as little as 3% down for a first-time home buyer. I think if you're not a first-time home buyer, it's 5% down minimum. And then 20% down, if you do that, you will not have to pay what's called mortgage insurance, which is it's not like homeowners insurance. It's an insurance that the lender charges that protects the lender against default on the loan. So just know that if you put less than 20% down, you will have that. But if you don't have 20% down, that doesn't mean you cannot get a loan potentially. FHA loans, 3.5% down is the minimum. So there are loan down payment. VA, if you're a veteran, you might be able to do zero down. Um, the rates are going to range based on down payment, credit score, and even the property type. So our best rate right now on our portfolio, purchase, 720 credit, auto debit is 6%. So I would say the range of rates right now is anywhere from, and there may be other lenders out there. I've heard some lenders sub six, meaning in the fives, but that might be relationship based rate pricing. So I would say a good range right now is probably for 30-year fixed, anywhere between 6.5, 7.5, probably right in maybe that range, 7% average. Um, Condos, you might have a little bit higher rate on a condo. So if you are shopping for condos, just keep that in mind that if you're comparing quotes and you're asking different lenders for quotes, make sure that you include like it's for a condo so that you're comparing apples to apples, so to speak. And then also with regard to things like manufactured housing, the rates may be higher on that too. So just it depends on the property type and the program and the credit score.
Yeah, wow, 6 is really good. And yeah, I would think 7 is going to be a good average. And um, but I would just reiterate, it's really important to find the relationship and the lender that works best for you. Um, more than just what the rate is, because there's a lot more in the relationship and the long term of home ownership um, than just the rate. So I'm going to shift gears a little bit and just talk briefly about the next step of the process, or the other partner in the process, which is the realtor. Um, and a lot of the things that we've talked about are going to be similar in that, um, finding the right real estate agent is really important, and that's going to come through conversation. So again, I would encourage you to check out the Coastal Housing Partnership website and see the agents that are there, or attend our upcoming fair. And I'm going to put that up. The And you can meet lenders and realtors at our home buying fair. And that's a great way to start the conversation and get to know them. Um, and as I said, Olivia will be there. Uh, and so we've talked about this. Once you kind of get your financial picture and you get a sense from a lender, and you're getting to the point where you're prepared, and you have that pre-approval letter, that's a great time to start engaging your real estate agent. Then you really are looking at, and you're getting good information on homes that meet your ability, and that you'll be able to purchase or have a good chance of making an offer on. And so that's a great time to start looking at them after you kind of get things in order and identify what you can afford and really what you feel comfortable affording, because you don't want to go and find a house that you love and then stretch yourself too far and not be able to pay for it in the long term, right? You want to really try to be thoughtful in purchasing a home that you can afford and that you can keep um, staying for a long time. Um, yeah, we talked about just having good chemistry with your realtor and somebody you work with. You're going to be talking a lot with your real estate agent and with your lender through the process, especially once you start making an offer. You're going to be really engaged with your lender as well. There's a lot of back and forth, and you want somebody that is responsive, that you can work with well, and that's going to respond to you quickly. Do you have any other thoughts or tidbits on real estate agents that in the process, Olivia?
No, I just think, yeah, it's like John said, it's really good. It's really important to have a good relationship with your agents, both real estate agent and lender, or loan agent. Just the three of us will all work together. The lender will work with the real estate agent, but ultimately, yes, it should be someone who is responsive to you, someone that makes you feel like, your time is valuable. So I just would reiterate that, what John said.
Yeah, and so just to, what is the role of the real estate agent, right? Because we talked a lot about the lender and the importance of what they're bringing to the table and how they can help you through the process. Um, the real estate agent is really a guide. They're going to be a helpful person to help you through the whole process. Yes, they're going to identify properties for you, um, and should you have your own agent or should you just go to open houses? It's really, I think, valuable to identify and have an agent working on your behalf. You're going to miss out on opportunities if you're just looking at Zillow or looking at open houses. There will be properties that come on and get sold before you find them that way. And so having an agent who's a part of the net, who's a realtor and part of the local MLS, is going to be able to find properties and maybe hear about properties from other agents before they come online or just as they come online, and get those to you and get you in the mix. Um, and so it is really important to have somebody that you're working with. They're also going to be able to negotiate with you for you. If you go and meet a realtor at a open house and use them, that may put them in a what's called a dual agency situation, then they're not able to really negotiate for anybody. They're just transactional. And you want somebody that's there with your best interest in mind, looking at the comps, trying to get you the best deal, an appropriate deal that you can find out there. Um, so it's really important that you have somebody that you can trust and work with, and that can help you in the market. And the last thing about that I would say is that finding an agent who really understands the local market that you are looking to buy in is really important. Um, somebody, even if it's a family member or otherwise, and they're going to give you a deal or not charge you a commission, there's ways to work at that or ways to do referrals or other things, but you really want an agent who knows the market that you're looking in, who knows the neighborhoods, the areas, and knows things about little nuances that are coming up or that are becoming bigger deals like insurance. There are different areas that are going to increase your homeowner's insurance or make it harder to get insurance just being on one side of a street or the other. And so working with an agent who knows that area really well is really critical and important. Um, and so I think we should talk about that. I'm going to come back to you, Olivia, because I got another question here from an attendee, which is a good one. They say, I just turned 55 and I'm interested in programs for 55 and over housing. Are there special programs for this or special rates?
So on the loan side, we cannot discriminate against or for age, I should say. So there's no discounts that I'm aware of. There may be down payment assistance or payment assistance programs for 55 plus. Um, I know there are communities geared toward 55 plus, but on the loan side, there are no discounts age related.
Yeah, and there are properties or communities that can get special designations to be 55 and over. Um, and that is a unique thing that the community has to be applied for because obviously fair housing laws and fair lending are really important for everybody. And so there are certain situations where those are the case. Um, but otherwise, you can't discriminate on age or family status and things like that. So you may want to look at 55 and over communities if that's the type of community that you want to participate in. But as Olivia said, there's not rates for that. Thanks for all the questions so far. People keep questions coming. There's a few more topics that we will cover, but would love to answer your questions in the last 10 minutes or so of our time together. So before I jump into some of these well, actually, let's step back into something that I brought up because it's become a big discussion of late, especially after the LA fires and some of the things going on, which is homeowners insurance. Um, that seems to have become a much more um, a much bigger part of the lending discussion. It used to sort of be, yeah, you can get homeowner insurance. Now it's becoming a part of the what you can qualify for, right?
Yes. So when we are doing our initial pre-approval for buyers, we use a factor for insurance. Typically, that factor is 0.30% of the loan amount annually. I'll say that again, 0.30% of the loan amount annually. So if you want to figure the monthly, you take the loan amount times 0.30%, get your annual figure and divide it by 12. We're finding that that is still somewhat accurate, but that some of these policies are coming in higher premiums than that. And so that we're trying to get home insurance quotes up front so that we can make sure that borrowers will still qualify if the insurance is increased from our estimate. That said, a lot of borrowers that I'm working with currently are having to use California Fair Plan, which I'm not an insurance expert by any means, but I think that's a little bit of a last resort for some people. I have seen good premiums or decent premiums on the Fair Plan, um, but sometimes the coverage is insufficient. However, we can look at getting what's called replacement cost estimate. And as long as that meets, the replacement cost is sufficient, we can use that in lieu of a full, dwelling amount having loan amount coverage. So that's kind of getting into a lot of information, but basically, insurance is getting more challenging, but there are still options out there. And so the couple purchases that I have going right now are using Fair Plan, California Fair Plan, and they are being approved that way. So
And maybe you could just, if I assumed about this, let's just clarify what are the factors within the payment. So principal PITI, maybe
yep.
talk a little bit about how insurance plays into the calculation of your loan payment.
Yes, so you may have heard the acronym PITI. That stands for principal, interest, taxes, and insurance. So those are the factors that make up your mortgage payment. And then sometimes you'll hear PITIA, which includes association dues if applicable for like a condo, or if it's in a master association, there may be dues. So the PITI, principal and interest, is your mortgage payment. And then you have property taxes, and then you have home insurance. And the property taxes for a new purchase, we also use a factor for that. That factor is 1.25% of the purchase price annually. So I'll say that one again too. So for property taxes, the way we estimate that on a new purchase for you is 1.25% of the purchase price annually. So taxes we base on the purchase price, insurance we base on the loan amount. So a little bit different calculation there, but we find that those are pretty accurate calculations. The for the property taxes, they will do a reassessment when you purchase a property. So you'll get, a new, we don't have that amount for sure. That's why we have to estimate that.
Right.
But those four things comprise the payment, the mortgage payment.
Great. Again, please put your questions in the question and answer section so we can answer what's on your mind. A couple other things. You may have heard about last year, the NAR settlement. There's some discussions around that. This was a national lawsuit that was settled between the National Association of Realtors. What it did was it basically separated the process of identifying or negotiating the commissions for the home seller and the home buyer. And now it's the responsibility of the buyer and the buyer's agent to negotiate their commission, and the seller and the seller's agent to negotiate their commission separately. There was fear that that would change a lot of the interactions, or there was some thought that might lower prices. In reality, as we talk to other agents and we look around our community, that hasn't had an impact really at all on the process. The sellers are still able to offer a concession to pay the buyer's realtor. So there haven't been a lot of changes as a result of the NAR settlement, but it is something for you to be aware of, that there will be a discussion with your buyer's agent at the front of the process. This is a great time to mention to them that you're a part of the Coastal Housing Partnership, so that you can discuss that and understand what you're paying. But in reality, we're finding that the sellers are still often paying that portion. So something to be aware of, and certainly to have a conversation. But again, we haven't seen that in reality changing the process or any of the interactions, just a little bit of the language. Have you seen anything, or do you have anything on that? That's more of a realtor type thing, Olivia, but I don't know if you have any thoughts.
Yeah, I was just I was doing another panel before, and I told them the same thing, that I have not seen any impact on my side from that change. I think probably because that happens more on the negotiation side with the agents. By the time the purchase contract gets to me, it's already been established. But no, I haven't seen anyone who, couldn't qualify because of any of that after already have been pre-approved. So no.
Is there anything else you want to add? What are some other like big takeaways, or what are your final thoughts? Any major things that you tell people every time you meet with them that you think would be helpful to potential buyers that are here on the webinar?
Yeah, I'll think about that in a second, but I did want to revisit just real quick on the rates because I know you mentioned don't shop lenders based on the rate, which I kind of want to reiterate that only because rates can change literally by the minute. So if you get a rate quote from a lender one day and the next day you get a rate quote from another lender, the rates, I just heard that the rates jumped like a 0.5% one day, like either this week or last week. It was just kind of crazy. So just be aware of that. And then the other thing with that is that you can't actually lock in an interest rate on a purchase until you have a fully executed purchase agreement. So you might get a pre-approval letter that has a rate on it, and rates can either go up or down in that time frame by the time you find a property. And so if you're checking with multiple lenders and they say, "Oh, we just, our rate went down to this," that's great, but it's not locked in until you're under contract. So just kind of something to keep in mind. That I just wanted to add that thought on the rates, but no, it's exciting. It's exciting time, even though it's kind of I think there's a lot of uncertainties going on just in the world, but it's always an exciting time to buy a home. And I think there's great resources with Coastal Housing Partnership. It's great. There's realtors, there's agents, I think most of the people on that list, if not all of them, should be a valuable resource for you. So take advantage of that for sure.
Well, thank you so much for your time, Olivia, and your insights and thoughts and sharing that with us. I hope that you will all reach out to Olivia or check out the list on Coastal Housing Partnership and join us at our home buying fair, April 29th in Goleta. This is a great place to meet lenders and realtors in person to have conversations, maybe identify that person that's going to be a good fit for you. We'll have mini seminars to go over this, and you can ask your questions in person and hear more from other panelists. So we hope that you will come, bring your family, bring your significant others so that you can be learning about this together, or anybody that you might be looking at buying with. And so we hope that you will attend and really appreciate your time today, and hope that you have a great rest of your Wednesday. Thanks, Olivia.
Thank you. Thanks, everyone. Thanks, John.